Hello traders, this is Rich from TradeSight. Just wanted to take a few minutes here today and review a trade that we did yesterday that was a short call in the VXX. The VXX is a derivative product that essentially tracks the VIX, the cash VIX, and generally moves contra to the market. So let me talk about the setup here. What we're going to do is we're going to walk you through the setup, the execution, and also talk about the market conditions and the risk reward that was involved with the trade. So let's first take a look at the market conditions that pointed us towards this profitable trade. All right, so here's a look at the overall design of the broad market represented by the ES futures. They track the S&P 500. We had our eye on this gap window that was in place here. This is the day before the trade. This large dark body candle to the downside came right down to this gap window and used that as support intraday and settled just a little bit above that. The next day, this is the day of the trade. This is the white candle. We opened in this area, but actually proceeded lower and actually came in to just about fill this gap, but we didn't quite get there. So while we were hoping to get this gap filled and then maybe look for some upside into the non-farm number that was coming out on the following day, we're looking for a little bit of relief, a little bit of a profit-taking strategy by the bears who have been making money from this downside move into that monthly non-farm number. So that's a very big number, and we were expecting that. There was a good probability that some of the shorts that had enjoyed the ride down would be taking some of those shorts back to take some profits ahead of the number to reload if the number moved the market higher. So what we had to do is we wanted to drill down to a smaller time frame to see if there were any other technicals that would lead us to believe that we were going to pivot higher from here and see the overall market go higher, which would actually drive the VIX lower. Remember, the VIX works opposite of the market for the most part. When the market's rising, the VIX is usually dropping. So let's take a look at a smaller time frame chart. We're going to go down to the 15-minute chart. So now here's the 15-minute chart that gives us quite a bit more detail of what was going on intraday. This is the day that we're looking at right here, starting on the 6th. So we opened up, traded essentially sideways, then we started to break to the downside. As we were breaking to the downside, we got very, very close down here to filling that gap, but we came up just a little bit short. So what I wanted to do was take a look at what the seeker study might have to say if we're very close to some kind of an exhaustion point. You can see that we did have an exhaustion signal here. That's the 13 with the green hour below it that indicated that was going to be the end of this decline, even though we didn't quite fill the gap, and then the market was ready in both time and price to make a reversal to the upside. The seeker study has two parts. Here's the setup phase, the 1 through 9, and then the countdown phase, the 1 through 13. So once we got into the red numbers in the countdown phase, and I noticed that we were getting fairly deep into the count here. Notice this candle here, that's the low of the day, was bar 12, and I knew that if we get one more bar down, we had a shot at reversing this back to the upside, and we got that. So now that we had the gap pretty much filled, we have a high probability reversal indication in place here from the TradeSight Seeker. Now we're looking for a reversal back to the upside, and the shorts covering and taking profits into the number that's coming out the next day. So there's a couple different ways you can play. You can play it straight up from the futures, or you can play one of the derivatives. I chose to use the derivative, which was the VXX. So if the market was expected to go up, the VXX was expected to go down. So right now I'm going to put up a 5-minute chart of the VXX and talk about the setup. Alright, so here's a 5-minute chart of the VXX. So you can see the VIX was on the rise when the market was selling off there as it was approaching that 13 exhaustion. You can see we did get that 13 exhaustion right when the VIX was right about here, and you can see the VIX did put in this lower high here after this initial high watermark. So we kind of started to roll to the downside here, started rolling to the downside, and then we had this little hiccup where we started to move back to the upside, but it was expected from our signal in the futures that this was going to continue to the downside. So then the trick becomes, where do you pick your entry? Classical traders would probably be looking at about this 20-30 area, which would be a breakdown below this support area from the prior day in the VXX, but I didn't really think it was going to be necessary to wait that long because we already had that signal in the 15-minute futures that was pointing higher for the futures, which should make the VIX go lower. So we set 2059 as a short trigger, which would be a break under this little pivot here. This is where we had this initial move to the downside and then this little bump to the upside. So what we were trying to do was right after the heart of lunchtime, this is lunchtime here, 12 to about 2 o'clock. So just coming out of lunchtime at 2 o'clock, getting back into the prime time when we're expecting traders to start setting themselves up for that number to be released in the subsequent session on Friday. We wanted to be a part of them kind of reorganizing their portfolios and taking some shorts back, as we had hoped anyway. So what we did is we set a short trigger on this crossing below 2059. If it crossed below 2059, we're going to go short. And then the question is, where do you put your stop? Well, the obvious stop would be just above this little reaction right here. So that's about 2085 or so. So right now you're talking about about a 30-cent stop or so. So 30 cents keeps you well off the high of the day with plenty of profit potential. So the trade triggered here when it crossed 2059. We had this initial decline back down to this little area of support, and that got it about 30 cents or so in the money. So that 30 cents matched what we had risked on our stop. So you take something off there. I took off half. So that way, even if that's all the chart's going to do to the downside and it's going to reverse back up, if I leave my initial stop up there, I don't have a loss. It's only just a break-even trade. So hopefully, looking for some more downside. We did get a little hiccup here. Came up to kind of retest the entry area. Some conservative traders would choose to lower their stop now to the entry after having taken a partial, and that's fine. That way you'll definitely lock in at least some kind of a partial profit on the move. But even if you chose to do so, you were still left in the money by the trade, because we then started to roll to the downside and actually started to really pick up speed into the close. And we had a low of the day close here, closed about 1990, which is about 70 cents in the money from the initial short trigger. So that was a real nice winner for us. 30 cents here was your first partial, and then what I did, I flattened out ahead of the number and took my 70 cents on the balance and went on my way. We did gap down the next day, so if you did choose to hold some over, and you could have, because you were plenty in the money here. We had a low of the day close, so two key things you need to have to hold something over is you have to be in the money, and you usually want to see a low of day or high of day close, depending on whether you're long or short. So you had that, and if you had the foresight to stay short into the number, it definitely worked out in your favor. So I just want to review that. These are things that we do all day long at TradeSight, and I hope we learn a little something from this. And as always, thanks for listening. This has been Rich for TradeSight.